Well, hello again, everyone, and welcome to the Options Mentor. Hey, and this week we passed 1,000 subscribers to the channel. Thank you very much for that. I really appreciate it. And we also had an interesting week in the market, still flirting with all-time highs, just bouncing around 4,900, ended up closing there 4,890 on Friday. And now we have an interest rate decision coming from the Fed next week. Let's take a look at that schedule real quick. The news that is. And if we look here, I like to use the Market Watch calendar. There's a lot of great calendars out there, though, to just see what news events are coming up. And the big one here this week, of course, is the interest rate decision Wednesday afternoon. I don't think there's really anyone that expects them to cut rates. You might find some people out there would say it, but the market generally expects them to not cut rates yet. So everything will be with a focus on what they say about going forward. When are they going to cut rates? How close are they? Is it going to be June? Is it going to be whenever? So they'll really be looking at that and trying to figure out what the Fed means. Currently, as I was reading this week, the market's way ahead of what they can justify. One analyst I read said that the market's going to have to spend the next 3 months trying to justify the rally we're in right now because there's really nothing behind it, because it's really based on interest rate cuts that the Fed has never said they're going to do. So we'll have to see where that goes from here. Also on Friday, we have the non-farm payrolls, which will be the unemployment rate also. And so that'll be another big event. So there's a couple things coming our way. Doesn't mean we can't trade, just things to be aware of with our trading, because those type of things can move the market. Let me get that out of the way, and then I'll talk to you about what I'm thinking about this week. And that is a combo trade. What's a combo trade? That's whenever you take generally two different strategies and you combine them together. And what I've done here, let's look at the individual components. I did a call calendar. I'm modeling it here. By the way, this will be for February 9th. February 9th. And that's because I don't want to have anything on this week that expires this Friday. If I can get out of anything I already have like that tomorrow or Tuesday would be great, because I really think the volatility is going to stay elevated until that news event, the Fed rate decision, and whatever report they have. And also there'll be a press conference with the Fed chair. That'll be Wednesday afternoon. And I think that the volatility in Friday options will stay elevated until after that news comes out, which means you'd have to probably be in whatever you have expiring this Friday to really see any theta decay until after that. And of course, at that point, there could be a move and you may have to handle that. So I think you're better off if you're starting a new trade just to go out to the following Friday. And in this case, I did do the 9th. I'm going to do the 9th and the 13th, a 4-day wide calendar, meaning I'm selling the 9th and buying the 13th. You could do it 3 days wide. I like being a little wider because volatility is super low here at 13. So this is the basic setup. So we're going to do 48.50. And you look at this and you think, well, Mark, you have hardly any room to the upside. What if we do get up to 48.20? Well, a couple of things easily could happen. Secondly, I think that's probably where you get resistance again. Now, we've had a lot of resistance at 4,900 that the market's really struggled to get through. And 49.20 would likely be resistance again, and then probably 50. So if we put this on, we have lots of downside with the calendar, good theta decay, but we're going to acknowledge, hey, that we could go higher by doing a put diagonal. What's a put diagonal do for you? Well, if we go up here and buy the 49.20, now this I will do 3 days wide. I'm not as concerned about its Vega exposure. So I'm going to just do it a little closer and it's a little cheaper. So 3 days wide, selling the 9th, buying the 12th. And you're going to buy the 49.20 put, selling the 49.15, just 5 days wide. You've seen me do 10 points wide ones. Those are really even more bearish. We could just look at one here for an example. And you could do that. But whenever you do that, you're giving away here on the upside some security. You're really going to be taking pretty good heat here and really would want to act with some kind of adjustment no later than 49.30, I'm sure. So I like the idea of doing this just 5 points wide. Let me get that set up again. And that is because we still don't have much exposure down here. We're pretty flat, but we do have room up here. So it's a way of getting room to the upside while at the same time not costing us a lot of risk to the downside. Now, when you put the calendar on with it, now we got some nice decay. Yes, the calendar down here does give you a little more risk to the downside, but lots of theta that goes with it. By the way, this trade's long volatility. What do you think is going to happen if the market goes down here? Well, volatility is going to rise, isn't it? And that's usually going to be good for our trade. Now, if we do go up, we really wouldn't have to do anything until at least 49.40. You could just take off the calendar, maybe add something on the upside. So I like this trade. It gives us a lot of width. We really have from 48.20 to 49.40, 120 points that we really don't have to do much of anything, right? And hopefully we could be out of this. That's the plan. Try to be out of this by this Friday. Hey, if you could get out of it before with 5 or 6%, I would probably just take it. But by this Friday, you certainly should be able to be out of this at 8 or 10%. Because it has $55 a day in theta. Of course, that'll get bigger every day. And currently, the way it's priced, this trade would cost you just under $1,000 to put on both of these together. So this is a trade that I want to have on probably sometime tomorrow. Put it on later in the day, most likely. And of course, you're going to have to adjust it around. You say, Mark, what if we open up at 49.30 tomorrow? Well, gives a day some time and just move everything I set up like 40 points, right? Because we're at 48.90 as I show you this. Move everything up 30 or 40 points. And then you could still do this trade. Volatility, by the way, will be even lower. We're long Vega. The trade would look even better if that happened. Now, if we did open up way down tomorrow, I would probably not put on this trade. I may consider a calendar later in the day or even a fly. But if we're down in here, volatility would have spiked, and I think that changes things. But if we open up anywhere with, say, within 20 points up or down, I think you could do this. You could always adjust it one way or another. Or you could probably do it 30 points up or down as long as you moved it around. But if we get over 50 down, I'd probably pause on that for a little bit, maybe reassess even on Tuesday or certainly Monday afternoon before I did anything. But these trades have been working well, the long Vega trades in this environment. Yes, you've had some stress as the market goes up. It's always going to stress a non-directional income generating, theta generating spread, because you can have the market move either way when the market really gets trending, like it has been a lot, up to the upside. Sometimes that can be a little trying, but we have just been chopping the last few days. This leg up, no doubt, can be a problem. You can always fix that by, an adjustment of some sort. But you just have to acknowledge that we'll never trade if we're always afraid the market's going to go one way or another briskly. We can't do that. So we have to get in there and be willing to adapt to whatever the market does, even after we have the position on. Once again, I appreciate you guys getting me up over 1,000. And subscribers, please do like and subscribe if you're watching here and you haven't done that yet. I appreciate it. Tell your friends. And check us out over at SheridanMentoring.com. Every day we teach options over there. And I will be back with you next week. And we'll get through this. And then hopefully the market after this week and all the movement that you'll probably see or could likely see, hopefully we'll get back to a more calm market, makes our trading even easier without these big trends. But we got to get through this week first. And you know what? This could all be a big nothing. A lot of times these rate announcements, particularly when there's no rate change, are kind of big nothings. The market really doesn't move very much. So we have an excellent chance of that happening this week. We just have to be aware that it could. All right. So I'll be back with you guys next week. Have a great one and good luck with all your trades. Bye-bye.